I'm Ethan Requette. Thank you for joining me here today. And today we are going to be talking about 8 of my rules for investing. These are my personal rules. You can disagree with me. This is not investing advice. Whatever your decision you may make is up to you, as this is for pure entertainment purposes only. As a full disclaimer, if you have to watch one YouTube video and based off of one person, then you probably should invest. That's for Wall Street bets. Now, I am not a cat, so if you like this video, please like and subscribe. If you don't like it, hit the dislike button, leave a comment below, give me some healthy criticism, always encourage it. And if you stay till the end here, we're gonna leave something for you. But anyway, let's talk about sticks. So, this is the most important rule that I like to follow. That was dumb. But rule 0, KISS. Keep it simple, stupid. So, when you invest, do you really want to look at a whole bunch of candlesticks, do that forex trading, do the day trading, buy, sell at the right time? Because really, you have to be right several times in order to make something like day trading work. So it makes no sense to me personally why I would want to ever day trade and sell a company that is really good and valuable when I can just hold it.
People, if they just think of stocks as pieces of business, they'd be so much better off than thinking of those little things that move around in price. And
I can just hold it, buy more as I see, and invest consistently over the long term. Say if I started investing $1,000 and then I just kept on putting $500 in a month over the course of, let's say, a year. That's going to build up, and that's going to be more over time than the person who even timed it theoretically perfectly, who bought every dip and so on. And maybe you can disagree with me, but the math is there. You can look it up. It makes sense because when the dip comes, it's going to be higher than what the previous low was, typically on average. So if you were to buy something for $10 and you're going, okay, I'm gonna buy the dip, I'm gonna buy the dip.
well, if you own stocks like you'd own a farm or apartment house, you don't get a quote on those every day or every week or anything. You look at the business
And suddenly it goes up to 15, I'm gonna buy the dip. And suddenly it drops to $13, oh, here's the dip. The person who paid $10 and had bought at 10, 11, 12, 13, 14, 15 has an average price that is lower than the person who waited for the dip. I mean, doesn't that make sense? Because buying the dip is not necessarily the smartest. Now, if you average in your cost and then you're like, okay, I'm gonna buy a little more because the price is on sale for $13 and I might never see this again. You can't predict it. You literally cannot predict it. So why waste time trying to buy dip when you can average in your price, you can study other industries, you can study the current industry. You'd rather just keep it simple, buy, hold, don't day trade, don't do forex, because you have to be right several times in a day when most people are lucky to be right once or twice in a given lifetime. On to number 1. So the O and the N, this board keeps falling because this adhesive does not stay on. However, you can kind of read that. Business is competition. When you buy into a stock, you're not buying into a stock, really. You're buying into a company, and that company consists of people, if that makes sense. People don't understand that they're buying into the ideas of other people. That's all a company is. And that person who wants to double their money overnight, a friend once told me, okay, I want to invest in this company, I want to triple next week.
people would rather gamble. I mean, the idea that you can double your money in 6 months, that's just going to, it's why people go to the races, why they go to Vegas, you know, whatever it may be. They even know the odds are against them, and they still do it.
That's not how it works. You need to do your research. You need to study all you possibly can about the company. You need to study the competition, the top 5 most important people. You need to study what industry they're in, how much can they grow, watch interviews on the CEO. Read that annual report, and just in general, read information on it. A lot of people underestimate the power of reading, the power of learning and reading books. You need to always be learning, always need to catch up on this information. Otherwise, somebody's gonna pass you. Somebody is out there reading books, watching videos at 4 a.m., trying to grasp the same concepts as you and getting ahead in life farther than you, and it's going to win out over the long term. Now, you might get lucky, you might be able to beat them in the short term, but in the long term, they'll probably know how to manage their money better. They probably have a plan. They probably spent way more manpower than you studying it, and they cut out all the BS. All the BS that the news outlets make, and
we like the stock. We like the stock.
They just took it down to its bare bones fundamentals. What is this company and what is my valuation on it? That is the most important thing. On to number 2, anything is yours with work. And this is where I mean here. If you are spending 8 to 10 hours a day for a living, studying, investing, doing all your work, doing what you're supposed to do, then you're probably gonna make it pretty far. I would say 90% of people can become a millionaire. Some people above that even. Some people could become a multi-millionaire, decamillionaire, if they have enough commitment, if they put enough effort into it on the side and treat it like a job, like a full-time job, and they enjoy it, rather than just see it as a way of making money for the pure purpose of making money, if that makes sense. It has to be enjoyable for you. Because no one got really good at something without being miserable.
It's like eating glass and staring into the abyss. So it's if you go into it expecting this, it's going to be just fun, you will be disappointed. It's not.
If they didn't like it. Now you can be reasonably successful at it. You can be very successful. However, you might experience this dullness, this empty feeling if you just don't enjoy investing. If you find it boring, then go ahead and do something else. Now, investing is important, but what is good about today is that you can invest into a broad index fund and you can still reach that $1 million goal. You can still buy that nice car. You can still get that home loan through investing if you just simply have a goal and have a risk tolerance and be honest with yourself on how much time do you really want to commit to this. Do you really want to be the best? Do you just want to meet your needs throughout life? And do you just want to achieve a certain level of financial freedom that comes with investing?
We like the stock. We like the stock.
That gives you a passive income. Just think, what are your goals here? Because you don't have to be the best. Now, it's certainly possible to be the best if you want to spend the time and commitment into doing so. You certainly can. On to number 3, understand the people. Like I said earlier, a company consists of people. Their whole leadership is everything to the company. You need to understand their culture, what their mission is. Who are these people?
Who are you people?
You need to understand them inside and out. Every little thing you can find out about the people, the higher-ups, the top 5, maybe 10 most important people, you need to know about. And you need to understand how fierce is their competition. Who is there up earlier than them? Is it relevant to them? Who is there working 16 hours a day trying to give you a good return? Because at the end of the day, if they're a public company, to some level, they're trying to appease to their shareholders. But that's not necessarily the most important thing here either, because you have to consider the fundamental problem solved, which we'll get to in a second. But just try to keep in mind, what are their intent? Is it just to make money, or is it to solve a problem and genuinely make some sort of difference in another person's life? And how much can they scale? Number 4, last10k.com. Now, this is an excellent resource that I use all the time. I'll look up Apple, I'll see their annual reports, their 10Qs, then their 10Ks. And what's great about an annual report, what's so important about it, is just finding out what their mission is, finding out what their future goals are. What is their revenue? Where is it coming from? Are they a viable business for a long term? There's usually like a little chart of sorts showing how much they're making on the product per quarter, per year. What they plan to do in the future to ramp up production, slow it down, maintain it, what have you. Why are they paying a dividend in the future? All that stuff. They make that all public to you, and they're supposed to do it by a certain window of time. So they have to be truthful and on top of it. This is all regulated by the SEC. Last10k.com, very valuable resource. So that way you know if they're making $1 billion in revenue, but they're losing $2 billion, is it really a good business to invest in? Now, if they're reinvesting into a company at a rate where they're just growing and scaling up, maybe it's a valuable company. But if they're just flat out losing $2 billion because of leadership, then consider reconsidering investing into a company. A fundamental problem solved. Now, this is where a lot of people get out of hand. A lot of people were tricked by the Nikola scandal, for example, where they have a prototype out. They came out through the spin-off of a SPAC, which isn't necessarily bad in itself, but when you're making no revenue, when you're making nothing, and your idea is still a concept and you don't have a market, there is no fundamental problem being solved. It's simply just hype. When you're just rolling a truck down a hill like what Nikola did, I mean, it's not really the safest investment to put your money in.
You don't want to own this stock. You don't want to lease it. Heck, you shouldn't even rent the darn thing.
Because there's nothing being solved. That's the problem. So if you buy something off of hype, you need to know always what fundamental problem is being solved, how fast can it grow, how much can it scale, how much production can they make in a year, what is their growth potential, who is their leadership, do they plan on lasting forever, do they plan on merging with somebody, do you think they'll make it into an S&P 500, do you think that they're going to help the world towards sustainable energy?
Solar electricity is taking the tiny bit of energy that humanity needs for electricity, which I emphasize is super tiny compared to the amount of solar energy that hits the Earth.
These questions are essential to knowing if the company is worth investing in and what your personal risk tolerance is. And this is where a lot of the people screw up because they just think, oh, 3 letters and the price target. Good, stock go up. Stocks to the moon. But time will tell. You only need to be right once. So this can be interpreted several different ways. So if you wanted to invest into, let's say, a broad index fund, and you know you're going to get a 7 to 10% return on average over the course of 20 years, that means that you're going to be doubling your money about every 7-ish years because the rule is 72. That is one way of being right once. Simple enough. Your risk tolerance is low, and therefore you get a steady return. However, if you want money a little bit faster than that, you need to be able to study that individual company. You need to be on top of the ball and understand your industry deeply and have your own little niche.
Don't take today off. Not today. Wait until tomorrow. Don't give in to the immediate gratification that is whispering in your ear. Shut that down.
Now you can have 1 or 2, maybe 3 little industries that you kind of understand really well, that you spent a bunch of time studying and understanding. However, there's only so many companies that you can understand at a given time. There's only so much information that you can process, and it gets to be a point where it becomes kind of ridiculous, right? How are you supposed to know 30 different companies at once? In my opinion, that is more dangerous than just owning one company that you know really well. Now, this can be argued, this can be varied from person to person. However, if you're going to buy 20 or 30 different companies, we'll go back to rule 0. Keep it simple, stupid. Just buy a broad index fund. That's all you need. And that's going to beat whatever portfolio that you buy, very likely. Now, it's not a given, but it's pretty likely. I can say it pretty comfortably here. Now, number 7. Diversification is for the well-off or the ignorant. Now, let's say you have $1 million. It's going up 7 to 10% per year. That means 70,000 to 100,000. And you take out 4% a year. That means 40,000 a year indefinitely. That goes up to inflation about 6 to 10% per year. That more, well, never mind. 3 to 6% per year. You can get extra, and that's going to go well above inflation. So you're going to see a gradual increase in the price over time. As you build a family, potentially, you increase your lifestyle slowly but surely, or you just want to keep on reinvesting it and have a higher hedge. So taking out 40,000 a year on $1 million thing, that is a very decent portfolio there. People think that $1 million isn't enough, but it truly is if you do the math. All it is math. You can calculate however you want. However, if you're starting off with $1,000, I mean, $40 to $100 is not enough to live by per year. So that's why I think diversification isn't really necessary until you get to at least like 5 to 600,000. Because 5 to 600,000, that's still about 20 to 25K-ish per year that you can take out at a 4% rate. That is pretty reasonable for a single person depending on the area where you live. But it does not make sense before then, especially if you're trying for personal freedom. Now, if your goal is to put a down payment for a house and you have time, you're only going to put in a certain amount per year, per month, what have you. I mean, that's fine. It depends on what your goals are. Personally, I'm seeking personal freedom. So my goal is to ramp up my net worth as quickly as possible rather than focus on diversifying. And those who are already well off don't have to worry too much. And those who are ignorant, and I'm not trying to offend anybody who does diversification and doesn't have this crazy net worth, it's just you have to have a certain risk tolerance if you have this goal of reaching $1 million when you only make $20,000 a year, or you have to just buy steadily and have that tolerance, lower your expectations a bit. For those of you who are diversifying and you don't have that much of net worth, your goal is not that high, that's fine. That's fine. But if you want to take that time to invest in individual stocks, do your research, understand your company really well, and you know that you can leave it there over a course of 20 years without touching it and you'll be perfectly fine. That's the goal. That's what you want to achieve. That's all I'm trying to say here. Just don't YOLO all your money. If you want to do that, just go to Wall Street Bets.
A few things I am not. I'm not a cat. I am not an institutional investor, nor am I a hedge fund. As for me, I like the stock.
I think it's fun. However, don't make it your main portfolio. Do not fall for the trap of the person who turned $10,000 into $100,000 in a day by YOLOing all their money into option calls and screenshotting it and putting it on Reddit. That is not a way to compare yourself, because that person took a big risk, a big gamble, and they got lucky. Likely. Now maybe they did their research, but options are a bit of a risk. Putting all your money into a stock that you don't know is ludicrous. On to number 8. Have a plan. So people come to me and they want to invest in the stock market, right? They want to make money. Well, what the hell is your plan? What is your plan? I'll ask them and they'll tell me, oh, I just want to double my money. I want to make more money. Okay, cool. So that person who invests and gets a good return, right? Rosy scenario here. And then they make $70,000. They buy a nice Mercedes-Benz or a Tesla, and then their high conviction stock goes up even more. It goes to $200,000. They pulled out at the wrong time, even though they had a high conviction of it. They could have had a higher return. Or just having a goal is going to help set you up in life. Because that stock that went up to 70,000 could have easily went down to 5,000 or 10,000, and then you just sell at a loss if you buy them for, let's say, like 20, 30,000. So you need to have a goal, you need to have a strong conviction so that if the stock plummets but your fundamental personal thesis stays the same, nothing has changed about the company, then you don't have to panic. A lot of people panic because their stock goes down right when they buy it. They lose 2/3 of their value, but nothing has fundamentally changed about the company, only the people buying and selling it. Because at the end of the day, it's just people buying and selling irrationally. But over the long term, this stock is going to win out over its personal fundamental value. Over the long term, a stock market is basically a weighing machine that will be like, okay, this company gives a lot of value.
And the big wireless companies are busy spending billions on advertising. At Mint, we're not into wasting money, so we bought this spiffy stock footage for $500. Our footage also came with another hand.
You gotta place it higher. Over a short term, it's like a slot machine. If you really want to do that day trading and all that, invest for like a year or less. Because ideally, the right investor, the true investor, invest for 10 years out, 5-10 years out plus. And that's where all the good returns come from.
The value of American business depends on how much it delivers in cash to its owners over between now and Judgment Day, and I don't think it changes in 10% in a 2-month period if you're looking at it as a business.
Having a long-term thesis, keeping your money in, and investing consistently is the most important thing for investing.
Anything can happen in markets. I mean, anything can happen in markets.
If you take nothing else away from me, from this 20-year-old wacko here, investing over the long term and having strong conviction into something is very, very important. And as the decade goes on, we're going to see all kinds of growth and disruption beyond all reasonable belief that you can ever imagine. So electric cars are going to be the norm. People know that. Robotaxis are going to drive themselves. Potentially DNA sequencing is going to go up. It's going to become cheaper, and it's going to become more viable to edit your DNA. It's gone from 100,000, Steve Jobs being one of the first 7 people to get their DNA sequenced and having a complete analysis of it, to where now it can be done in a much lower time scale for under $1,000. And so it's just remarkable things like these, remarkable feats, where this becomes a decade of deep learning. Don't listen to the person who is just telling you 5 different industries in a given year. Oh, I see this weed stock. I see this crypto thing. I see healthcare going up because of the. Don't buy into the hype. Tune it all out. Take out all the fluff and just have your own little niche. Have your own little industry that you can understand. Have your own little system that you can do well in and thrive, and just ignore what everybody else says. If somebody tells you your investment is stupid, then you just simply say, all right. If they have no fundamental understanding of the company that you have researched, then you can just ignore them. Now, if they actually are people who know a lot of what they're talking about, they're like engineers and they know about product X, Y, or Z, then maybe it's worth a listen. But overall, it's trust yourself, trust your fundamentals, and trust what you believe in, because that is what's going to help you win in the long term if you put in the work, put in the effort. And for those of you who are up doing this for a living all the time, respect. Hopefully you know most of this, or you have your own little thesis, you have your own little system that works, because mine could be wrong over time. But what's important is that you have your own system that you believe in and understand. And I know that if you're really putting the time in, you're going to make it. you are going to do well and you are going to thrive, especially if your plan is to get into one of these industries yourself, because this is creating an understanding of people, creating value, and this could just be the first stepping stone to starting your life in business. With that being said, guys, if you like this video, please like and subscribe. If you didn't like it, please dislike and leave a comment below. I'm Ethan Requette. Thank you for watching. I'll see you next time.